Tell me how the world's going to end, Joe. I read that article in preparation for this. I'm curious to see where this is going to go.
It's the root of all evil, of strife and upheaval.
Start of this week was a little bit weird. An obscure AI research note triggered a broad sell-off across markets, and it just had this really outsized impact that's far beyond the typical reach of a typical single research piece.
You think they really traced it back? Like there was a dip, I guess, from Friday, and then when the markets opened on Monday, there was a noticeable dip in sort of the index things. They really traced it back to that article, you think?
It was all anyone was talking about on Monday.
Really?
That was it. That was the story.
Damn. Okay.
That's why it was so strange, because like no one is people like, who is this guy? Apparently this Citrini researcher, whatever. I think he's like 32, 33 years old. He just started this firm not long ago. So really little known, not a big presence at all in the industry, but wrote this really interesting story about how the world's going to end, pretty much.
Yeah, the bearish argument for the AI thing. Yeah.
Very, very bearish. Yeah. And to his credit, he prefaces it, like the first line of it is something like, this is not what we expect to happen. This is a
scenario.
This is a toy scenario, something like that.
Yeah. Yeah. He says to be fair, this is a scenario, not a prediction.
Yeah, exactly.
But I guess it rang true with enough people.
Yeah, it was. That's why it was so weird. It's there was a broad sell-off, obviously focused on the things that are closest to technology and AI. The broader market, I think S&P was only down like 1.5%. I think like the NASDAQ was down further, but some of those names were down like quite substantially, just because like, oh, these are the first dominoes that are going to fall. Here's this scenario that's going to just wipe everything out. Who's going to be first? And that was it. That was the story for the week. And, for the day. And this is coming right off the heels as well of the tariff announcement at the end of last week of the Supreme Court ruling the usage of the IEPA Act as illegal. And I thought the week was going to be all about tariffs. I was getting ready to talk about that this week, but I'm actually kind of glad that we don't have to, because people didn't really even care about that. I mean, it was just all about this AI thing.
Oh, interesting. So the response in the markets to the tariff announcement was somewhat muted?
Really not much at all. People always kind of question the ability to use these IEPA tariffs the way that he had used them. He had been so cavalier about using them, just literally throwing them around whenever someone made him angry. So people had long kind of suspected that this probably isn't going to work out. It's got to go to the courts first. So that's what happened.
Yeah, right. I remember Besant was playing a little bit of defense, I guess. He's just like, look, we kind of knew or expecting we're just going to use a different approach, or like this or not, as even though the media and big articles are coming out saying that they're quote unquote illegal across the board. Besant put in some more nuance and said they're really only talking about this slight thing, but broadly it's still going to be able to go forward.
It was just one type of tariff. I forget the exact number. So it was the majority of tariff revenue. I think the number for 25 was something like 270 billion. I want to say just over 100 of that was not what was struck down. So like a little less than half will be unaffected. Okay. But he just instated new ones after, so we're just starting this whole series over again now. Yeah, markets didn't really care that much for that reason. Along with that, we can touch on a couple honorable mentions as well. Some of the other topics that we've heard about this week, some of the things that were important in the world of finance and economics that we just didn't have quite enough time to look into, but we certainly would if we wanted to.
We would if we could. We do want to. Yeah.
State of the Union on Tuesday. I don't know if you watched that, Luke. It was okay, kind of all over the place in his typical Trump fashion.
What would you rate it? IMDb 8.5 out of 10.
We're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. You're going to win big. You're going to win bigger than ever. To prove that point, Here with us tonight is a group of winners, the men's gold medal Olympic hockey team. Come on in.
I don't think many people probably caught during the State of the Union. We mentioned it last week, something about oil production. It made me think of 333 again. We mentioned, or I think at least I mentioned it briefly last week.
Oh yeah, right. How's that coming? What's our 333 scorecard? Okay.
Yeah, 333 scorecard. So also at the start of the week, we got fourth quarter GDP. So we've also got the full 2025 GDP growth number in. So what do you think the scorecard looks like, Luke? I already told you 600K for oil.
Yeah, right. So 333, that's Besant's plan. So 3% growth, GDP, 3 million more barrels of oil per day, and then 3% deficit. So right now you just gave us one, so we're at 600,000 more. And you gave us, what do you say growth was, like 2 point something percent on the year?
Yeah, at the year clocked in at 2.2.
Okay,
was the final.
pretty good. Not quite at 3, but on the right direction. And the deficit is still really high. It's like 5 something.
5.7, but it was projected to be 6.9. It was 6. I think it was 6.7 before. It was supposed to be 6.9.
Okay, heading in the right direction. Pretty good. On pace. 4 years.
I'm the same way. I'm like, you got to give him some credit for that. That's, we're still got a long way to go, but that's a move in the right direction. If he can pull that off again this year, which it does look far more difficult this year, I will say. But
really,
if he gets down to the 4s, well, this tariff stuff, a big part of that was all that tariff income, to be honest. Like, it really does have a big impact. So first year, we're at 2.2, 0.6, 5.7.
All right. I mean, if Besant were here, he would say something like, "This is a massive ship. We turning the entire U.S. economy. It's going to take a year or so just to turn the wheel and reposition the ship to go in the direction we want." And that's what we did. That's what we did in 2025 and 2026. Just going to reap the benefits, smooth sailing, all the metaphors.
Two of the other things real quick. I don't know if you heard, private credit was in the news again at the start of the week.
What is private credit? Because that shows up in this article too.
Yeah. Credit not issued by a public company. Private credit is extending credit effectively to, entities or individuals that are not in a public entity that's required to disclose these kinds of securities and all the details around them. All these things like the pay-as-you-go things, Klarna, pay in 4 payments, whenever Amazon extends credit.
Maybe sometimes referred to as like shadow banking or non-bank finance.
Yeah, exactly. So non-bank finance, just stuff outside of the banking regulation.
Got it. Okay.
The inherent issue there is that there's no transparency. So people don't really know what these securities are worth. So they get structured and issued. They take in, investor cash, extend the loans, pool the cash flows together, pay the investors back. You make 10, 12, 15% yield, high stuff. Life is good, right? But you don't know what's in there. So even the investors themselves, sometimes it can be really difficult to get the actual detail of where the cash flows are coming from. Why it's so kind of scary, I guess, is that it's like a binary switch that happens. It's like you don't see, because you can't see the pricing of these securities, you don't see things trending lower like you see the stock market going up.
Are they securities? Like, what are they? So, okay, just to even back up, because I imagine people listening would probably get a bit confused here. So we got, what's like a private credit entity? What would their assets and liabilities look like? The liabilities would be investor capital. So people will like invest into a fund, and then the manager of whatever will take those funds and they'll give out a loan. Or are you saying there's like a separate, it's a loan?
Yeah.
It's not like a security. It's like a loan.
Well, typically, and then, those managers make lots of loans and then they pool them together into a security.
Okay.
And the investor buys.
And what happens to the security? Okay.
Yeah. So it's like the private credit you get on Amazon or Klarna. The payments you make through that are financed from that security. And then those payments then go to the investor eventually. But
So
if people stop paying their retail bills because there's no interest, people make frivolous purchases, whatever, you don't even know that that's happening until some event happens that it
right,
becomes
okay,
too big to
got it. So
ignore.
they're pooling. So it's kind of like in the old days of pooling all the mortgages, except instead of mortgages, they're taking this unsecured, weird, like split up your pizza payment into four different
Yeah,
things,
so
and they're
like
taking that.
retail lending is just one piece of it, but yeah, basically any kind of lending that's not in the public domain,
Oh,
publicly
that's
traded
interesting.
securities. Yeah,
Okay,
and it's such a big problem because, like, again, you don't see a problem until it's too late, because the managers, they're under every incentive to not mark the bonds lower, and by mark lower I mean, you know if you're trading like regular credit, a bond issued by a publicly listed company, if their business starts doing more poorly, you think that their cash flows are going to decline, their business is going to crater, that debt is going to trade for way less. People, you're going to need a way higher yield to hold that kind of stuff. You can see it happen in real time because it's a publicly traded thing. You can call up your broker and get a quote for it. These things, it just doesn't exist. So managers are under every incentive to keep these things marked at par because that's what they get paid off of as well. So
yeah.
if
Reminded of that scene from The Big Short. I don't know if you remember. A while back, one of the shorters played by Kristen Bale. Fuck, what was his real name?
Michael Burry,
Michael Burry. So there's a funny scene where he's expecting the market to implode,
yeah,
but it keeps not imploding, and he just gets super frustrated.
that's exactly what it is.
It's
Yeah,
right. They're just, oh, they can keep just surviving one more day.
it's like like as the bank in that scenario, or as the manager in this scenario, you just have every incentive to not touch the price. If it's not trade, if it's not changing hands, you don't have to
Right.
change the price.
Right.
People could call you up and say, this, like the cash flows are barely even there. How can you possibly not mark this thing down? Oh, they're going to come back. It's fine. Don't worry about it. It's like that until it's not.
Is that
So
you?
people-
Is that you on the phone 5 times a day, Joe? Hey, who's keeping? You know that like funny picture where there's this big stack of like little blocks and stuff, and the whole thing could topple if this one little thing is just kind of like pushed
That's
out of
it.
the way. You've seen
Yeah.
that, and that's Joe right there holding up the price of everything. Whoa, yeah, it's fine. It's fine. Don't worry
we're all
about it.
good.
Yeah, don't worry about it. They're gonna come back.
Yeah, pretty much.
Yeah,
So
really giving
that's-
our audience a whole lot of confidence here. All right. So what
Yeah.
happened with the private credit? You said that there was a scare.
One of these large private credit managers, one of their retail funds had to be marked down in some way. So it was kind of like cracks in the system kind of thing.
Oh, interesting.
Yeah,
I did not hear
so
anything about that.
that made the headline. So that was also competing for attention on Monday with this AI piece, but the AI one ended up winning out in the end. With the private credit, we actually got a new Jamie Dimon quote as well. I don't know if you remember, Luke. I think we mentioned it here. Related to private credit, we had something similar at the end of last year, and Dimon was asked about it during some public function, and he said more or less that if you see one cockroach, there's probably going to be more. Meaning that,
right.
we're probably at the start. Yeah. So now this week, his quotable is now he's seeing some people do some really dumb things. So dumb things was the quote going around. He said, this is what it felt like 2005, 06, 07, leading right up ahead to the GFC. We got cockroaches before. We got dumb things now. I don't know what his third comment's going to be.
No, I got to say, I had this kind of market face. Okay, this was not in my radar. Glad this is now on my radar. All right, thanks, Joe.
On to the main event here. All those things happened. Didn't really get much attention. It's all about AI this week. So it's been about AI for quite a while now, obviously, just all the hype living around us, people, watching these products come out. In the financial world, that's been what's been driving, like the major driver of growth in the US stock market for years now. The people talk about the Magnificent Seven companies. Now they're calling them hyperscalers. these just extremely high capex plans that these major company, Amazon, Meta, Microsoft, spending tens of billions of dollars. Every new headline is um, Microsoft's investing X billion dollars into Nvidia. Nvidia is going back and investing that money right back into Microsoft. Then there's these concerns, these kind of circular lending going on. Is it going to live up to the hype of all this cash being put to work? No one really knows. So, there's one sense to worry about the health of the financial system, and that is way too much credit being extended to these companies too quickly to where we're going to see a similar kind of .com kind of crash. There's a lot of reasons to think why that is not the case, and I think that is not the case. And then there's the other side that worries about AI destroying humanity, pretty much. So this week I want to talk about the latter, the extra spicy one.
And by destroying humanity, you don't mean Terminator coming and killing everyone. You just mean they're going to take all our jobs.
Take all our job, yeah, yes, effectively make society break down. The paper itself, the note itself, is this fictionalized scenario where they're writing a research note written in 2028, and then kind of looking back and picking out the main headlines and the ways that these dominoes slowly fall over time. Basically, it's you see this growth keep going, and it's this really great thing until it's not anymore. And then once you get to that point, it basically everything's too late. It's too late for policy to work. It's too late for businesses to revert their business models to be more people intensive. It's this, kind of like Hemingway said, going broke. It happens very gradually and then suddenly. So this is predicting more or less 2 years out. We could realistically see things slowly deteriorate through 26, start to accelerate a little bit in 27, and then by 28, it's like everything just grinds to a halt. But the core assumption of this paper is that these agents just become so incredibly productive and capable.
What's an agent?
An agent is one of these AI models that is kind of self-directed. It can do multiple things. So rather than taking in on one of these chatbots, taking in a prompt and giving you a response, then it stops and waits for the next thing. This one, you say, go and do my job for me, like whatever that entails. Okay, go and check my emails. Go and write this presentation about this project that's in this email.
It's like a step closer to an assistant, like a proper executive assistant or something.
That's what it is. It's meant to handle, like, I guess in the parlance a little bit, like long time horizon tasks. Right now you can say, write me a computer, mock me up a website about this kind of topic that has this functionality, and it'll go ahead and write you the vast majority of the code very quickly, and you can just paste it in, and you can say, oh, we'll change this a little bit. But there's this back and forth. With an agent, you could kind of say, okay, go build this website about this business idea that I have. Find a domain name. Go make some money to buy the domain that I want. Stand up the website. Start communicating with advertising platforms to get it out there in the world. So that's what agents are, and that's what they're doing today in like very simple ways that people are using them to clean out their email inboxes and like really small toy things, but just like long-term things that they don't need to be they don't need to be prompted each time. They're self-directed things that can just, in theory, go on kind of nonstop. They're very early, and their kind of operating horizon is like pretty short still, maybe like an hour or like within an hour. The assumption is that given the pace of artificial intelligence explosion, 2 years from now, these things can do tasks that are, weeks long at a time. You can give it just a massive project that would take a group of people months to do, and you give one little, computer program a few weeks to do this huge scale thing. So the cost is effectively electricity. So that's not nothing by any means. It's electricity and energy is becoming incredibly expensive the more and more these things are being used. But if you're talking about, instead of using a team of 5 or 10 people to do it that are getting paid $100,000 a year, now your $500,000 project is, I don't know, a $10,000 computer and couple $1,000s a month in resources to run it. So that's the core underlying assumption, that by these things are slowly let out into the world, they're becoming more capable all the time. And then as you start making these assumptions, then you can even say, then the agents themselves are improving themselves. They're learning how to do tasks for longer. They're learning how to do them better. Basically, they're learning how to do your job better and better without you having to teach them.
Right.
This paper outlines this scenario, and it does it through this story-like way, saying, oh, here was this Bloomberg headline from this point showing MasterCard's revenue fall by 15 or stock fall by 15% because agents entered the scene, effectively totally disrupted the whole payment system that we've talked about before, let alone credit cards, even just Visa card payments, because it's saying to an agent, it doesn't matter if you use the traditional payment system or if you just go straight to a effectively zero fee stable coin kind of thing.
So yeah, I was shocked to see this. We predicted a little while back that stable coins are going to go right after the credit cards. Like that's really what this is about, the payment rails. And I think the article here is saying that AIs are completely agnostic to whatever the previous way of doing things are. So like good example would be checks. People still use checks today because that's just what we've always used. AIs don't have that problem. They don't have a traditional bias of any kind. They'll just go out and find the best thing. So maybe the adoption of new approaches and technologies will be much faster if you got a bunch of AI agents going out there trying everything, including podcasts that are lesser known. And then
exactly,
coming out and saying which one is best and pushing up to the forefront. Things are just way more nimble at like a social level, how things are going to be used. That was an interesting point.
Yeah, definitely. And it's the point that these things don't get tired. They don't sleep. They can just run for 24 hours a day, just doing things constantly. So they're not only doing all of these things without sleep, without any breaks. The cognitive throughput is just orders of magnitude higher.
Right. Okay.
So you start putting all these pieces together, and then it goes through different industries and kind of laying that out, that it just quickly removes frictions from basically any industry. So writing checks, it's not a thing that people born today are going to be doing in the future anymore, but there's going to be a couple people around at that point that are still writing checks. It's just going to happen. It's going to exist. It's going to it's going to take time and resources to process those things. With agents, the implication is that you would just wipe all of that stuff out overnight. Even if you want to write a check, your agent just comes back and tells you, hey, burn your checkbook. In fact, even close your bank account, put your money in the stable coin. You're not going to have any fees. You have instant access to it, and I'll manage it all for you. So that's really the core underlying, is that just this explosion of practical real world ability of these agents that doesn't require human oversight. And so once you say it doesn't require any human oversight, like I see you nodding, kind of eye roll right there. And that's the point, I think, in this paper, where it starts to go from this looks pretty scary, pretty plausible, to, okay, it's going to do every single job you can imagine better. That's when it starts to get a little more far-fetched.
Okay. Well, every single job imaginable. The paper does draw a distinction between, I'm going to call the electron economy and the proton economy. So the electron is just the knowledge worker, anything that just uses a computer solely. And then maybe the more labor intensive one, the proton economy. Some people describe it as moving atoms, people who actually have to go out and build something physically. AI obviously can't help with that. At that point, robotics will be the threat there. But that's, I guess, farther down the line. That if the timeline on this thing extends out to 2028, robotics, I guess, is going to happen a lot later. But it's not going to be every single job. And they do talk about how people will be forced out from, I think they give an example in the paper of, there was a project manager at Salesforce and she got fired. She was earning $180,000. She got fired, tried to find a job for 6 months, couldn't do it. Now is driving an Uber and earning $45,000. the authors say this is what's going to happen, except on mass.
Yeah, and so what leads to like the true doomsday scenario? This isn't just people losing jobs. This is the entire economy collapsing effectively.
For
They draw this parallel
knowledge
to-
workers, yeah.
Well, well, that's the thing. It starts with knowledge workers, and then it just slowly envelops everything.
Okay, I think there were two break. I think so. I did read the article in sort of preparation for this, and there were like two spots where I was like, "Ooh, that's a pretty tenuous line." I thought they kind of jumped, but I guess maybe you'll get to it.
And so it draws this parallel to previous recessions, previous kind of shocks to the system like that, and it shows why this time is different. So traditionally, whenever you have recessions, it's a broad slowdown in economic activity. People start to lose their jobs. Businesses pull back from spending and investment. Then you get some sort of policy response or normalization, usually some mixture of the two. Things start to pick up again. Business investment starts rising. They start hiring people again. They start spending again. The economy's back. And that keeps going until something else happens. And then there's some other hiccup. The whole thing goes round and round. But the point is that there's this kind of natural corrective mechanism to it. And that's whether it's the policy response or just the broad normalization of the economy. You know, whether if something, asset pricing gets way too out of hand, like we saw in the financial crisis, things come down and they normalize, but it comes with a great deal of pain along the way in terms of job losses, lost income, that sort of thing. But over time, and we've seen this every recession that has ever occurred, there's a corrective mechanism, and we do eventually come back. This one's different. Their core assumption, I think, is that pointing out why this natural corrective mechanism is just not there anymore. As people are fired, that's a hit to the economy overall. Businesses were already pressured before. This says then it makes the assumption that they maintain their margins a little bit by cutting their costs, by firing people, but then they see that they can do that because of these new AI agents. So now they don't need to rehire those people anymore because they realize these agents can do just as good of a job for a much lower price over time. And then the problem is that this natural corrective mechanism just kind of never comes back. So as cost saving occurs through that way, the major assumption here is that all those cost savings that pressures the rest of the economy because people are getting laid off, that then pressures businesses to lay off even more people, which they're compensating for by hiring even more agents. And as they just keep doing this, headcount just dwindles more and more and more. People just aren't needed to do these jobs anymore.
Where do you think it breaks down?
The first part it breaks down is that, so the thing that people say today is that, you know, in previous technological cycles where productivity is greatly increased, you know, the big ones are industrial revolution with the steam engine, information age with the internet, it created many more jobs that it ended up destroying in the end. So there was a lot of job losses, but it's not, you know, a permanent hit to the economy. It's just some churn along the way. Again, that's not to mean that there's not a lot of pain along the way, but over the long term, things recover, society's okay, economy keeps growing. If you take the assumption that, or that feedback loop totally breaks in the story here, because it's saying that all the new jobs that were created from new technologies in the past, it still required a human to actually do those jobs. This one's just saying, well, the AI is so advanced, it took your first job. There's no reason it can't take these new jobs. And in the paper, it went so far as to say, even AI engineers, even people that are managing teams of AI can do that. So that's the first point. Like, it makes this logical leap that effectively people aren't really needed for anything. So it starts, so like number one, it's people aren't needed for these new jobs that AI is creating. So Luke, that's to your example that you pointed out, that it said like a marketing manager or some highly paid white collar worker, they find that their skills are now useless, so they have to take a lower paying service job. So that both is a huge hit to that person's income. That's gonna have a huge impact on the economy. In the US, 70% of GDP is consumer spending. If you lose 75% of your wages, you're going to take a huge hit to the economy at large. Not only that, but you're also now there's also more competition for these lower skilled jobs, these lower paid, lower skilled jobs like driving for Uber. Now everyone is trying to drive for Uber or whatever jobs exist still, that, like you were saying, proton workers or whatever, things that happen in the physical world. That depresses wages. You already had a deflationary spiral before from broad declining demand from these first agents coming. Now you have people that are laid off, competing aggressively for these already very low paying jobs. That pushes down wages even further. That pushes down demand even further.
Right.
And this is just, then it just doesn't end.
And where do you disagree? Like, what's the problem with that? Where do you think the logic breaks down? I've got some theories, but I don't...
Yeah, one of the main pieces is that it assumes that the shock first hits the top earners. So specifically, it talks about the top decile, and it used a little bit of economic numbers here and there, but they're all kind of very made up. I don't think they're really that useful, but it does point out that it's saying the top decile earners in America make up something like 50 or 70% of consumption. So it's really, really top heavy. And the other thing that they assume, not only that people aren't needed for any of these jobs anymore, it's those very people at the very top that are hit first and hit the hardest. They're saying that these people now anymore, like, not, so it's one thing to lose that income and now you trigger a deflationary spiral. It's that they make up such a large portion of consumer spending and therefore of GDP. So it just accelerates the process. But the assumption that it's going to be the highest paid, most advanced workers that lose their jobs first would just seem pretty flimsy to me. Again, so it's based on this assumption that even for advanced AI engineers, the people that are pushing these boundaries, that are creating all of this amazing output fundamentally from these agents, they're not going to be needed either. They're going to be the first to get cut.
I don't know if they meant even just like the top. Maybe they did say it, but I could probably forgive them to give some wiggle room and say maybe they mean sort of the middle level managers or something. I could see a situation.
I think that's the point. I think that's the point, because in previous kind of...
What's the point? That they do
previously
very,
you
very
have
top?
like middle managers and low skilled jobs go first. This one is saying it's not that. This is saying the most advanced top earners.
I mean, I think the thesis, you think that would break the thesis apart? I had two major issues with it. One had to do with this idea of theory versus practice, which I think they failed at. And the other one has to do with he's falling, I think, into the same fallacy or the same assumption that was made a while ago when they said that if, considering all these great productivity increases, we could have a 3-day work week instead of a 5-day work week or a 6-day work week. And that's what I predict people will be doing in the future. And that prediction was wrong. People were more productive, but they did work 5 days a week still. And this same concept with they're going to take our jobs, the assumption I think that's faulty is that people are going to want the same amount of stuff. And that's just wrong. People always want more stuff. So just because, and this is something I've thought about, like at my own company where I work, imagine if everyone got 10 times more productive because of AI. Does that mean that they're going to cut the workforce by 90%? Are they going to reduce it such that they're doing the same amount with 1/10 amount of people, or are they going to try to do 10 times more? I think what they're going to do, and management is very wont to fire people, they're going to try to do 10 times more. So now all of a sudden, all the projects that they had to backlog because they didn't have the resources, now you do have the resources. So that's, I think, that one of the assumptions I think that people fail to appreciate when they start saying that AI is going to take our jobs. It's like, no, now we're just going to do 10 times more stuff and services out there. That's one. But that people, you could still sidestep that and by saying like, look, the AI is just going to be able to do 100% of your job a lot better. And this is my second problem, and probably a more significant one that's more directly related to this paper, and that's the theory versus practice. They could not, so the theory is, okay, these AIs are super smart, they can do all this stuff, and I agree with that. Eventually that is true. In practice, though, there simply isn't a way to connect them into my job. Like, because right now my interface is Excel and it's different applications that I have on here. You couldn't just quote unquote sit an AI at my desk and have it do it.
Nor so that's actually what these agents can do today.
What, Excel and Word?
They can they can operate a computer in the way that you can.
Okay. So here's like the next part though. And this is kind of what I was getting at, is like there are like these massive complex data systems in these banks. And I would be hard pressed to say that one AI or any number of AIs could navigate that, because there's simply the mechanism by which they work with each other is not like internal. They're all separate. I just really struggle. And there are certain projects that I can't go into detail about, which I just don't even know how.
Well, but what do you mean that they're separate? I mean, they're separate in the way that you're separate from your coworker.
So let me maybe take a step back
together.
Maybe I need to learn a little bit more about these agents.
Mm-hmm.
If there was an agent that was working at my computer and you were just like, what does the agent know?
You can think about it as like a fully remote worker. That's effectively what it is.
But do you need multiple agents
of the model? Yeah. So I mean, given how much compute you have, you could deploy 10 of them or 100 of them.
But why would you need 10? Why wouldn't you just have one super smart one?
Because there are constraints still. I mean, there is only so much data that one can process at a time. There's only so much code that one could architect at a time.
But what is the interface? I'm just thinking about, it's communication that I'm questioning. And like right now, I need to constantly communicate with, I don't know, 10, 15 people, repeatedly at the bank. And what my question, because they know things that I don't know and I can't access. So just thinking about like the infrastructure, just like, the port to port connection here is my biggest question in terms of the theory to practice.
Yeah. I mean, just think about, the first days of COVID, everyone was remote and, you still worked with other people. You still got things done.
But is that how these agents are supposed to work? It would just be, okay, you're at this computer and you have all my same access.
That's effectively like how they do work already today. Yeah. It's just that they're just not very smart yet. They can only do, they're smart in that they can, so this is like the same chatbot you talk to. It knows, all the world's knowledge, right? But it can only answer one thing at a time. Agents are, if you can give them a self-directed, they can be self-directed. So you can say instead, go and build this financial model for me, not help me implement this assumption about this model I'm building. Help me write the code for this piece. And it's just like, go architect me a database with an API for a new website. Let me know whenever it's complete. That's effectively what agents can do today. So it can think really quickly still, but it still has to go task by task. So it still has to write a bunch of code to create a website. It can do that in 20 seconds when it would take a person 2 weeks or more. But then after it builds the website, then it still has to kind of figure out, okay, what do I have to do next to get an API working? What do I have to do next to get a database going? I have to call up Amazon Web Services. I have to design the database schema. I have to do all of these different subtasks. The agents can not only do a task you tell it, but it can then determine tasks it needs to do to accomplish a broader goal. It's about building on top of itself, not just relying on a user input for every single step that it takes. It can take its own steps. And so functionally, even today, people talk about it. It's like, think of it like a fully remote coworker. It can do anything that you can do working. It can access the internet. It can send emails. It could have data restrictions put on it just the way that you do, for example. It could be super smart and get around those restrictions. So that's where this kind of report comes in, saying that in just 2 years, they're going to be so scary good at doing any job available. They won't even need people to do the sub jobs that are created along the way. They'll just create a new instance of itself and tell it to go do those other jobs. And that's the example gave in the paper. AIs managing other AIs.
All right, I guess. The other thing that kind of bothered me with this feedback loop thing had to do with the loop that came out where it said displaced workers spend less, and then companies invest more in AI to protect margins. That didn't make any sense to me. I don't know why like an investment would be in something to protect margins.
Well, just to cut costs from paying people. So if your agent can do 10 times more work for half the cost.
But what work? No one's buying your stuff because no one has any money. I guess it's just like
that. Then that's the economic doom loop.
No,
this paper talks
but what
about.
are you doing? They're not doing anything. Like, what services are being rendered? I just don't understand how. Okay, now you have this,
yeah,
agents
aren't out there buying things.
A gazillion agents.
Like we are.
That's what they said. Yeah, agents. So what are they doing? They're doing services that do not earn any money. They're doing useless services, which doesn't make any sense.
Well,
you wouldn't do that.
Well,
anymore.
they're doing services for people.
Who's paying them? But I mean, let's give an example that's even closer to home. Let's talk about like this podcast editing. So like Riverside, for example, it's what we use to record. And Riverside's pretty cool. They've got AI or something, and they have some tools. They let you just instantly click, then it'll delete all of the ums and the uhs and the breaks in your transcript. They transcribe it, which is amazing. But then they also even started editing. They have those little shorts, like made for you little shorts, and they try to edit stuff. And I think you use that. I don't really like them that much, but if they could get it to a point where they could just edit an entire episode in a way that we like, that would be something like an agent would do. You would, instead of having to, that would be chef's kiss. And what would happen if that were the case? If that was an agent that could edit this stuff, what would happen? We would probably produce twice as many of these videos. Because it takes a whole weekend to edit one of these videos. So what would that mean? We would just produce twice as much stuff for the same amount of resources invested. And we don't earn any money here, but I'm just thinking like for like a company though, it would be something similar. Now all of a sudden, like legal services, accounting services, money makers, anything that has an agent, now all of a sudden who has access to these services would just broaden. So instead of like money, like wealth managers or something, you only have that service available to really high rich people. Anyone could have it because it's so cheap. You would just have an agent. But what you're saying is like there's no money to manage because no one's earning anything
in this doom loop scenario.
Yeah, I mean, it's like I also do not. The other thing is, like if you got fired tomorrow from your job and it was an AI that was going to replace you, what would you do? I mean, you would go out and you would look, maybe not gig, maybe you would try to pin your hopes on this podcast and we would just do this all the time, which I would say if we did this all the time, I think it'd be really great. Right now it's great. It'd be super great.
One of the things I would do is I would try to learn how to make the AI that just took my job.
How to make it? Yeah. You would go out and you would start, building the data centers. You would start, I would start making solar panels. I would go look for jobs at SpaceX. That's probably what I would do. And Tesla, they're going to need a whole bunch of people. I would start seeing what, plumbers and stuff. But that's what they're saying. They would start moving out in that direction. Here's one thing that I would do if an AI took my job. I would start to think about disrupting whole sectors of the economy. So this is probably, and I've spoken to my wife about this. Hi, honey. If I had to, I would try that healthcare company there. I would just totally disrupt the whole healthcare industry. And right now there isn't there's no one telling an agent to do this stuff. So that's what I would do. I would be the person telling the agent to do this stuff. But even then you would need doctors. You would need people to sign off on a whole bunch of stuff. You would need to set up the system, the company itself. That's something that a person would take. The other thing I would want to disrupt that's super ripe for disruption is education. Education needs to be completely redone. But AI isn't going to do that. Right? I mean, what are we talking about? At the end of the day, it's like the president is just one person working and it's just like directing a gazillion little agents to like do stuff. No, that's not what's going to happen. That's what you do. Because ultimately I think the entire economy and all the sectors will have to be rewired for an AI. The other thing that's kind of confusing to me is like, so banks, the agent that you're talking about is even just an intermediate step, I think, because it's silly, I'm sure, from an AI perspective to be working in Excel. No reason AI should be working with emails. Okay.
Right.
They would just communicate directly. You see that like freaky video where these two AIs realized they were talking to their AIs and like, oh, let's just switch to computer garbage.
Right.
Creepy AF, right? Have these agents come in. It's just an intermediate thing. You would go out and be like, I'm going to start a bank. No Excel. It's just straight up SQL and AI, or just raw data and AI or something.
So in that way, then I can start to see the angle that people can't even do that anymore.
Right. Once you get to that as super advanced level, I'm with you. But that's not happening in 2 years. I think that's 10 years or something. 2 years, no. You still need people, a lot of people to, obviously not forget about the proton economy. You definitely, until robotics come around and start taking those jobs, but that's much farther down the line, moving atoms and all that. But just the knowledge worker stuff, even just the user interface is still going to be required to use people for like education, for instance.
Yeah. And I mean, I think that's really the synthesis of why this paper doesn't work. It basically takes a huge technological advancement and says that it kind of instantly reworks the economy. But in the real world, there's always frictions. There's always slowdowns. There's always human interactions. There's human parts to it that, for all the examples that you just gave. And I think fundamentally, even in addition to all the other things I was talking about, the assumptions that don't make sense, that's really the whole underlying here, that the world is not as frictionless as this kind of scenario would assume.
Yeah, I was a little insulted as a human being for our lack of agency and capacity to like move and go find other kind of greener pastures.
Yeah.
I mean, we're a nomadic people once upon a time. And like, if things get so bad, we're not going to turn into that friend of hers who were just like looking for 6 months and landed on Uber. It's like, she wouldn't move her apartment or something? I just couldn't believe.
Yeah.
That kind of, I don't know why that example's really stuck out, but if things were that bad, I couldn't find a single job in 2 years. They refuse to do anything else. I think it's also another faulty assumption. I mean, I think I can be pretty resourceful if I absolutely had to. If it meant like, feeding my family. So, and again, if it came to the end of it, it's like I'm starting my own company. What you gonna fucking say about that? The thing is, like,
say, I will start a company way better than you, way faster.
So that's the other thing that doesn't make sense about this is like, who's buying if there's this huge outflow in goods, presumably things are infinitely more productive or whatever they say. Who's buying that stuff?
And that's also the point. That's the kind of economic doom that I kind of was touching on at the start. You're right, no one. But that implies that humans don't have anything anymore. Now it's just agents doing what agents want to do, whatever that is. I don't know. We're in science fiction territory now. And I think that's also the point of this paper. It's more science fiction than, serious economic forecast.
It's like, so you know how, Musk or whatever is projecting that far enough into the future, AI will just give you anything that you want all the time, whenever. It's possible that we could be trying to split this into two halves. At some point in the future, services are going to essentially be free. Maybe that's like and I could buy along with that. It's just services are so incredibly productive that they will effectively be free. Any service you want that requires knowledge, basically free. And that would be sort of one step towards having everything free. I could see that, but there's still plenty of space for other people to do other things.
Totally agreed. And that's the other, core faulty assumption. It just says people just aren't able to do any of these things anymore.
You can't, they're not adaptable.
So for that reason, don't worry about it, Luke. You can sleep well tonight. Your job's still going to be around in 2028.
Yeah. The other thing that struck me about this paper, I thought they did kind of well and kind of interesting, was they sort of just threw in those perspectives, like the news articles and stuff. I thought was kind of interesting. The fact that the financial strain doesn't really hit until it finally does, that I think is sort of insightful. But overall, I thought some of the steps from one thing to another was kind of strange. So like the way in which the paper zooms in and out gets me kind of dizzy. They're talking about the highest level, like no one's going to have a job and everything. And then it zooms way, way down into payment rails are suddenly going to be going over to stable coins and not this. And then it zooms back out to agents going to be working on everything. And then it zooms like all the way back in to private credit and life insurers, and how private credit are buying up life insurers to make sure that the insurance premiums that you pay and deposit into these things are going to sow the seeds of the next major crisis, because it's not going to be good debt and all that. And I'm just like, wow, this is really suddenly got super specific here. And then there's a quote unquote crash. And because crash has an association with housing markets, ipso facto, we're into mortgages, and now the mortgage market crashes. But there is no direct line connecting those that I could see.
He starts to meander a bit at the end.
It's just kind of, at this point, it's just kind of like we're going off by associations. We're just sort of, and there's no real numbers too. You gotta give me some numbers here. One of the things they talked, like it almost sounded as though, with parallels to the great financial crisis when the housing market tanked, that's a massive market, trillions and trillions. The ones here, it seems to be ticked off because the debt that are used by these AI companies aren't going to get paid back. I guess you're talking about the private credit market, what we were talking about earlier, all of a sudden is garbage. But how big of a market are we talking about there compared to the housing market? He didn't offer any numbers. He didn't offer any economic comparison numbers. He just kind of sees, okay, yeah, maybe this will get crushed, but how, relative to everything else out there, how big is it? Maybe didn't decide to see how big, and it turns out it's not that big. So I don't know, man. I'm a little skeptical. Wouldn't have moved me. I guess it moved the market.
Yeah.
But anyway.
Well, and so there is a reason that the day after things did recover, it was short-lived. It was just kind of an anomaly that it just took everyone's attention on Monday, and there was a pretty good sell-off for one day. And then the couple of days after, it came back, and it's kind of rear view mirror now. And I think that's kind of the point. This is an interesting story. It's kind of an interesting, engaging thing that this person wrote.
Yeah.
But in the end, it's not taken seriously. It was taken seriously for a day. Then sober minds came out. Obviously, people throughout Wall Street came out and poked all their holes in it, and people just took that and moved on.
Mm. I wonder about the movement of these markets sometimes isn't just people playing the market, not so much the underlying substance, or people playing how other people might react to it. So they would see this, they start to see it getting some traction. They say, oh, people are going to sell. So you sell first. And then
That's exactly what
when
happened.
it dips, you just buy it back. I'm sure there are plenty. That's a whole trading mentality. It's a trading model. What do you
That's
call it?
stock
It's
trading. Yeah.
That's stock trading strategy. You're just
Yeah.
having the finger on the pulse of the temperature of the room or something. And when things get cold, sell. It doesn't matter if whatever's underneath it is valid or anything. That's not the point. The point is other people think it. Other people feel the same way. Other people are making the same conclusion.
Right. Yeah, that's it.
And then it's self-reinforcing. You sell, and then people are like, I could probably only get 1% out of this. Buy it back.
Yeah, exactly. So that's what did it. Didn't last long, and people moved on already. But I thought this was an interesting thing. I think we had a pretty good conversation about it here.
Yeah, it definitely, when I read it, it's definitely a good chance to, because I need to brush up on this stuff. And this is going to be probably the biggest thing to happen in my lifetime. So it's important to at least start to read and think about this stuff.
Definitely.
Yeah. So this was a good opportunity to do so. Okay. Cool, man. Yeah. Well, thanks for showing this to me.
Yeah, of course. That's yeah, so that's everything I had for you here. Another episode of the Root of All Evil podcast. Thanks for tuning in, everyone. My name's Joe.
I'm Luke.
We'll see you next time.